On this conversation is Jim Rickards. He is Senior Managing Director at Tangent Capital Partners. And Jim, you look for market reactions today. Obviously, the Dow futures are down, S&P futures are down. Yields on the 10-year Treasury are down too, which is a little crazy. But I will give you, gold is skyrocketing. It's up more than $50 above $1,700.
Right.
So what are we to make of all this when we put it all together?
Well, that's right, Becky. And Andrew, just for the record, we own the Chinese.
We own the Chinese.
We own the Chinese. The president can freeze their accounts with one phone call. When you're the debtor to that level, you own the creditor. So the president can freeze their accounts with a phone call, and they have no gold, no significant amount of gold. So for both those reasons, we own the Chinese. And that kind of goes to your point, Becky, about the gold. I mean, gold, I tell investors, gold doesn't ever change value. It's the inverse of the dollar. So what this is really telling us is the dollar is going down. You can't get much out of the dollar index. It's our major trading partners, and all these currencies are joined at the hip. The Dixie is just sort of the euro on, on steroids a little bit. So, yeah, the dollar may go down kind of nominally. It's volatile. It'll go back and forth. But all the currencies are going down together against gold, and I think that's the significant movement.
You know, when you look at the dollar versus the euro, it's probably surprising that the euro hasn't fallen even further when you consider their problems behind all of this.
Well, I've been very bullish on the euro, partly because they have 10,000 tons of gold. The euro system as a whole, 16 nations have 10,000 tons. We have 8,000 tons. They actually have more gold than we do. If you combine Europe, the United States, and throw in the IMF for good measure, that's about 70% of all the official gold in the world. It's a lot of gold. And leaves, who's left out in the cold? Chinese, Russians, Japanese, Brazilians, believe it or not, and the British don't have much gold. So as the currencies, as the paper currencies begin to collapse, and you need to go to a gold-backed system, which I expect in a matter of years, the people with the gold, so I call the U.S. the Saudi Arabia of gold. We're a superpower in gold.
But that's not an argument for staying in the euro necessarily. I mean, if the euro collapses, you may have a lot of gold, but you may not want to share it with your neighbors anymore.
Well, that raises some geopolitical issues. Their gold is in the United States. So one of the scenarios I have is the United States would confiscate the European gold. No, I'm serious. It's what we've done before. And
we've done this before?
Well, yeah. Well, FDR in 1933 confiscated all the gold of all the citizens of the United States. This would just be an extension of that. And again, this all comes out of this International Emergency Economic Powers Act of 1978. The president has dictatorial powers. When I say dictatorial, I don't use that in a pejorative or hyperbolic way. I mean, he actually can just give executive orders to preserve the national security of the United States in economic space. So he could convert that gold, give the Europeans a receipt. If I were the Germans, I'd probably, I'd want to move some of the gold back to Berlin.
Yeah, why do they keep it here to begin with?
Well, sometimes you don't ask the question because you don't want the answer. If Germany called up the Federal Reserve Bank in New York and said, we're sending a vessel, we want to ship our gold back, the answer might not be pretty.
Let's say all the gold disappeared in the world. Was that like matter meeting antimatter? What would happen, Jeff?
It would go to silver, it would go to some other commodity.
Okay, so you would at least admit that. It's just such a strange thing.
Right? Yeah, well, it's actually better. I mean, I agree it has to be a hard asset standard, so common sense says let's pick, by weight, gold is much more valuable than oil. It could be oil. It could be a lot of things.
Is there any way it could be Chinese ceramic pottery? Because that's what my wife has been.
No, because you consume it. I mean, this actually
that's good though, right? I mean, it does go up in periods of inflation, right? Could you suggest that if we lose all the gold, let's go to Chinese ceramic?
This goes to one of the toughest questions out there, which is Warren Buffett's question. He said any number of times, gold is shiny metal. Would you rather have all the gold in the world or all the farmland in the world?
Right.
The correct answer is you'd rather have all the gold, because then you could issue a currency backed by gold, buy the farmland, and have both. You would just have a leveraged balance sheet.
I just still don't get. I don't even want any gold. I just don't understand why people crave it so much and want it.
There's no inherent value, no intrinsic value for gold. It's not a producing asset. The only advantage is that you don't have the problem of printing, of creating.
Right.
Fiat men are creating more of it.
Gold. And this today, look at that. I mean, it's a kind of a small mark, up $60.
Practically no one understands gold.
Right.
Here's the way to understand it. It is not an investment. Warren Buffett's right about that. It is not a commodity. It is money. So if you want money, you should have gold.
No, Bernanke said it's not money.
And then the South Koreans went out the next day and bought 25 tons. So you can, they're arguing.
Bernanke says it's not money.
Yeah, he did. He said that when Ron Paul asked him.
Oil's not money either. So.
You also have another problem with gold, and that is that if you link an economy to gold, and gold is only growing at 0.5%, then how does a whole economy grow? And that's a structural problem. As everyone says, well, we'll move to a gold currency. There's some problems associated with that. Granted, you don't have the printing of it the way you do with the currencies, but there are some other problems.
Hey, Jim, I'm sorry, we're out of time, but we'll have you back again very soon.
Thank you,
Appreciate your coming in this morning.
Thank you.